Hello, today I'm going to show you how to do a naked put trade. It's a fairly low risk trade on a lot of levels, although um, I will tell you where the risks are. So essentially, I'm going to show it to you on Apache Energy, and the way I came across this was I just had it in my trades and realized it's probably a good example. Um, it's a fairly large energy company, but it's trading fairly inexpensively. So it's a good example, and because it's right about $10, the percentages will make good sense to you fairly quickly. So going back to the chart, you can see it's kind of met overhead resistance. It actually could go down. Obviously, any stock could go down to zero, but it seems to have some good support right around $4 into the $6 range. So then what you want to do is see if it's worth it. Apparently, with an 87 IV percentile, it should have some premium in there worth looking at. So what I'll do is go to the Analyze tab, look at the 750 naked put, and it's trading for about 86 to 87 cents, with this being the wholesale or the retail ask, and then right smack dab in between is 86 cents. So what I would do is click on the bid, and that creates a sell position. Because we're not creating any kind of spread, uh, you could choose 86 or 87. If the futures are down, and you're going to do this as a trade in the morning, and the futures are down, you might want to go to 87 or even 90 cents. Chances are that, and the options just went, and it's 80, they're up pretty good today. So what we'll do is we'll just click it at 86 cents. And then I'm in an IRA account. So what this will do is effectively show you what your true risk is in this trade. So I'm going to click on confirm, and you see we have about $85 in credit and then $664 in risk. That's the difference between the stock going to zero and 750, which is the strike. So this number plus this number should equal right about $750. So you're taking on $664 in risk in order to make $85 in about 28 days. And then just for sport, we'll see what that is. So we'll divide 85 by 664, and you have about 12% in 30 days. Now, there are some risks in this, and the risk is if it ends up below 750, you may have to take a loss, or you may choose to roll it to a lower number and prolong your loss. Although you take it in that month, you may lower it from 750 to $5, which would probably be about 90 cents if you were in there, and then you have a $85 twice, or $170, and your risk was um, lowered because you've now gone 2 months, so your cost basis goes down. One way you can actually turn this into a short put vertical by just buying the long, either the $5 or the 250. If you're worried about Apache Energy going to zero, maybe just buy the 250 long, and I'll do that now. Oh, sorry, let me close that. Then I'm going to click on the control button and left click the ask, and it adds it to my spread. It only lowers it 3 cents. So if you right click now, go to confirm and send, you've lowered your risk profile to only $418. So going back to do the math, let's change this number to 418. and now you're at 20%. So that's two ways to do it. Because it's so cheap to add that 3 or 4 cent option just to as a ultimate hedge against maybe them going bankrupt in the next 30 days, you could add it. It also increases your profitability by several percent, so that's another reason. And then if you're just risk adverse, you may want to do the same trade, but change this to $5. This is still a vertical. You still make about $60, but now your risk is $192 roughly. Let's do it again. So you're going to make 58, and that's the number right here. And then you're going to go to 192. I usually just round up. And now you're at 30%. What this is, though, is you can make more money taking on more margin risk because, but then if you did two of these with only a $2.50 spread, your risk is about the same as one trade naked. So in this case, it's actually a good idea to think about just doing a short put vertical. Uh, with that, if you have any questions, please feel free to comment in the video, or more importantly, if you could go to optionsonfire.com and comment there. That way we get the benefit of the traffic to our website, and it helps us produce these videos. And if you have any questions, feel free to reach out.